Welcome to Industry Focus, the podcast that dives into a different sector of the stock market every day. It's Friday, July 15th, and we're talking about the year's hottest tech IPO. I'm your host, Dylan Lewis, and I'm joined on Skype by Fool.com senior tech specialist, Daniel Sparks. Daniel, how's it going?
Good. How are you, Dylan?
Doing all right. So yesterday, shares of Line Corporation began trading on the public exchanges. This is an online messaging company. They are trading on the New York Stock Exchange under the symbol LN. Shares are also available on the Tokyo Stock Exchange. And the first day of trading treated the company pretty well, huh, Daniel?
Yeah, shares rose about 30% around there on the first day of trading. Market cap now is around $8 billion. Like you said, the hottest tech IPO this year. So that's one of the reasons it's so well covered. And I think you mentioned it's under the symbol LN. Yeah, Japanese messaging service, kind of similar to WhatsApp, Messenger, huge emphasis on stickers, has messaging, voice calls, and they're always trying to add more services for people.
And I think one of the more interesting stats that I'd seen around this IPO and just kind of market news in the past week is a combination of bullishness from the Line IPO and some of the crazy price movements that we've seen from Nintendo following the launch and widespread cultural phenomenon of Pokemon Go. Those two things have pushed market sentiment and the Tokyo Stock Exchange to its best single week gain since December of 2009. Last I checked, it was up like 9% this week.
Yeah, the timing definitely couldn't have been better for Line to go public.
Yeah, I know a lot of people were worried when Twilio went public, about a month ago, with all the Brexit concerns and things like that it was a really poor time to go public. It seems like conditions were pretty great for Line. So no complaints there, I'm sure. Why don't we dive into the business a little bit?
All right, yeah. So the business, they started as a messaging service about 5 years ago. They have around 218 million monthly active users, and they're primarily coming from Japan. The service is really popular in Japan, Taiwan, and Thailand. In Indonesia, Line is second to BlackBerry messaging service, so BlackBerry is good at something. And let's see, stickers, like I said, are a huge part of their business model. I think the business, I think it was the global chief officer or some name like that from the business, pointed to Pokemon Go's success this week as evidence of the value of intellectual properties and characters. So they're really big on characters, which is interesting. And you'll see whenever you see references to Line, all their press material, they always have these like cartoon characters showing up. So that's a really unique. Well, it's somewhat unique because emojis in general are popular right now, but they're really focusing on kind of building out this intellectual property of characters and cartoon characters.
Yeah, it seems like it's a very big part of their strategy and something that they kind of anchor to as a differentiator.
Yeah, that's what I'd say is differentiation.
And so you talked about their main markets: Japan, Taiwan, Thailand, and Indonesia. I think those make up about 150 million of the 218 million monthly active users. And Japan, I believe, contributes about 70% of revenue for the business. So they're heavily concentrated in East Asia. They've pulled in roughly 1.2 billion in revenue in the trailing 12 months. Right now they are posting GAAP losses to the tune of about 55 million. With their current market cap somewhere around 8 billion, that puts them at just over 7 times trailing sales. So just kind of give you some background there. You want to dive into kind of how they make money, some of the different segments there?
Yeah, I think it's worth returning to what you said is 70% of the company's revenue comes from Japan. So investors should keep that in mind, that 218 million monthly active users might seem small, but when you consider 70% of the revenue comes from Japan, clearly it's a really dominant platform there. One, akin to how Facebook is popular here in the US. So, yeah, some of the opportunities here with the business, I think in the near term, Line is focusing on expanding its domain. So that's kind of interesting. Geographic expansion isn't really their focus, and you could see that's kind of been true for them in the past, given their high concentration in just three countries and the revenue coming from Japan. So that's one of the ways they're expanding is they're looking into music and video streaming. They recently got into mobile payments, taxi hailing. They have a they're kind of a low cost mobile carrier in Japan with their line out service. So that's one of the opportunities is just expanding on their already very engaged user base in their geographic markets before they actually go outside of those regions.
And that was
And
that was actually
yeah,
one
go
of
ahead.
that was one of the reasons they cited as a use of proceeds for the IPO. They said they'd be seeking funds to finance business expansion, could involve investment, could involve acquisition, or some sort of strategic cooperation. One of the other reasons they cited was debt paydown. They mentioned they were going to be using some of the capital from going public to pay down around $400 million in debt. I think a lot of that would be coming due between now and September 2016. So just to give you an idea of what the plans were for the money that they raised.
Yeah. Let's see. One other opportunity worth highlighting is that management kind of believes in this trend, and it's a trend that hasn't really been talked about much. But when you think about it, it could be true. It's hard to tell right now, but Line believes that apps are heading this way where there's going to be more services within the app that basically there's beginning to be too many apps and it's leading to confusing consumer experience. So they believe that that's kind of an opportunity there too.
And you kind of get that sense when you look at their revenue mix. We looked at a PR release from a couple months ago, and it gave a nice little breakdown of how they make money. So top level here, 35% comes in what they categorize as advertising, another 35% via content, 22% from communication, and 6% from other services. And so you see that breakdown and you're like, okay, they're fairly well diversified, and you can see they have their hands in a couple different things. To give you an idea of what goes into each of those categories, content includes line game, line music, line play, and a whole host of other things. Communication, stickers, what is something that we may or may not agree with being categorized there, themes, line out, other advertising, line-related ads, and portal-related ads. So you see their hands in a bunch of different things, but I'm not so sold on that revenue breakdown that they're providing of 35, 35, 22. I think stickers, it's kind of misleading to have that in communication. I think it's really more of something that kind of belongs in content.
Right. Yeah. So that does highlight the two things that there are a lot of areas contributing revenue, which is interesting, and that is, what Line wants to do. But yeah, when you lump them into bigger categories, like you said, stickers and even themes could be considered a content area. And we were talking about this before the show that maybe stickers and themes is lumped into communication just because it's related to their messaging service. But at the end of the day, it's, if you're trying to evaluate the sustainability of the business model, stickers and themes, should be given the same sort of value as content. So, yeah, that is an interesting thing.
And just background in case we've lost any listeners in what a sticker is. These are basically these packages similar to how you think about an emoji that users can pay for and use to communicate. And so some of the revenue coming in from there is just people choosing to buy these packages and be able to use them with their friends.
And an interesting note is I did hear that some of their characters can cost as much as $6. So they're cartoon characters.
That's insane. That is so much money. I don't see it personally, but I guess that's why I'm not a user, right? So looking at some of the risks, we touched on them a little bit before, but I think user-based concentration is a big one. So 151 million of the 218 million monthly active users are in Japan, Taiwan, Thailand, and Indonesia. Those markets experience growth of 23% year over year. I think that's great, but I just worry about them being able to take this concept and port it over to other countries.
Yeah, that is the concern, especially if they can't grow geographically. It could be a concern because basically building their business model into one that's more costly by focusing on expanding their domain within their current regions. So as they add more services and become more of a one-stop shop, if there is an app that comes into their geographic region and starts making inroads on their user base, then they're going to be left with this really costly business structure. So that's a major risk.
And actually, that strategy in a lot of ways is kind of counter to what we've seen Facebook do, right? Facebook for a long time was build audience, build audience, build audience, and they've added features. But I think for them, it was much more about global reach first and building out the platform into these distinct categories, and now focusing on news a little bit more and live video and things like that, kind of secondary.
Yeah, you're exactly right, and that really highlights a risk. A lot of times we're able to look at social networks and say, well, how does this relate to what Facebook has done? Because Facebook has, by many counts, executed far beyond anyone's expectations. So they're kind of the standard setters. So it is a little worrisome to see this company trying to really focus on building their domain before focusing on a geographic expansion, because it really just hasn't been done at scale yet.
And beyond the idea of the concept playing in other markets and people being willing to pay for stickers and what they are packaging all together working, you also have a pretty fragmented space in Messenger, right? I mean, there are a lot of Goliaths that are already there, and it's really tough to break into a market where you have Facebook Messenger, you have Snapchat, you have WhatsApp, and then beyond that, here in the US, I found out from my friend that's a teacher, a lot of her kids use a messenger service called Kik, which has a huge US user base. I didn't really know it all that well, but once you get beyond the top tier companies, there are still all these other smaller players there. I just wonder how effectively Line is going to be able to grow their user base outside of East Asia, given how crowded the market seems.
Right. And I almost wonder if they're, saying that they're focusing in the near term on current geographic markets could be almost a disguise for a massive risk, because you could look at the fact that they're not in other geographic markets as evidence that these giants are out there. And it's not easy to just, jump in and add to the many social messaging apps people already have. I mean, WhatsApp is over 1 billion users. It's huge. Facebook Messenger, 900 million monthly active users. So these are huge services. And then you have Kik, then you have Snapchat. So it's not going to be easy to expand geographically. So they could be focusing locally just because they have to.
Mm-hmm. Yeah, that's a great point. But I do think it's going to be tough for them to maintain and grow that $8 billion valuation unless they get out of those markets.
Right.
You can add on so many services, but really boosting your addressable market and the number of users on a platform is one of the easiest ways to boost your valuation as a company in the social space, right?
Right. Yeah, another risk, while we're on risks, is kind of the growth is slow. So in the last 3 months, monthly active users total are up 3.3%. Interestingly, even though they only have 218 million monthly active users, Facebook's sequential growth, so in a 3-month period too, is up 4%, and that's not including all of its other apps, Messenger, WhatsApp, which are actually growing faster than Facebook. But Facebook is I can't remember the exact. Do you remember their monthly active user base? I think it's
1.5.
5 billion. Okay, 1.5 billion. So and they're growing faster than
even with
Line right now.
Even with a much larger denominator.
Right.
I think part of the reason that the market was really fascinated by this IPO is it is the largest one in the tech space so far in 2016. There haven't really been a lot of IPOs. There just hasn't been a ton to be excited about, I think, for new companies. But also, this is the first time that we're getting a standalone Messenger app going public, right? Everything else has been, Facebook Messenger is nested underneath Facebook. Snapchat is currently private. We haven't gotten a glimpse at what the market thinks about this type of business. And I think for the next 6 months, year, it's going to be really interesting to watch this company.
Yeah, that is a good point. So that's one of the biggest things is that it's a messaging app going public. We can look back at WhatsApp's valuation when Facebook purchased it, and that was a huge shocker for everyone. When WhatsApp was valued at $22 billion, it just kind of shocked people. And one thing that what this does for us is it gives us kind of another comparison to WhatsApp is when you look at it on the valuation per monthly active user. So let's see. So $37 per user is what was paid for Line, and $42 per user what Facebook paid for WhatsApp. And let's see, at the time, for some perspective, WhatsApp had 400 million monthly active users when Facebook purchased it, and that was in October 2014, and now they have over 1 billion monthly active users, and even just from looking at that, you can tell that WhatsApp is growing faster. But even when Facebook made the purchase of WhatsApp, it was clearly growing faster than Line is now. So yeah, it gives investors kind of some comparisons of messaging apps, and it makes Facebook's acquisition look a little better. $42 per user for WhatsApp versus 37 for Line finally gives Facebook's valuation a little credence.
Yeah, it's nice to be able to level set a little bit there. Anything else before I let you go, Daniel?
Yeah, I think that just one area worth talking about is Apple. When they recently announced their upcoming update for iOS, one of the things they did is started building in all of these services natively into the OS. So this it brings up kind of a near-term opportunity and a long-term risk, because in the near term, it means services like Line, services like WhatsApp. So you're going to get a phone call from these services, and it'll actually come through just like a phone call. It's not going to, pop up a little notification box, which you have to click on and then go into the app and answer the phone call. So in the near term, it means all of these companies get more access to, Apple's user base. But in the long term, I kind of wonder if it's going to commoditize these messaging apps, and they're all going to seem so similar, and what the value of having a one-stop shop really will be when they're all seamlessly integrated into the user experience. So that's another interesting thing to think about.
Yeah, that Apple approach kind of takes all of these distinct messaging services and makes them kind of faceless, right, and puts them in their OS, and it makes it a little bit tougher for people to even realize that they might be using them. So I think that's an awesome point. Well, listeners, that does it for this episode of Industry Focus. If you have any questions or just want to reach out and say hey, shoot us an email at industryfocus@fool.com. Or you can always tweet us at MFIndustryFocus. If you're looking for more of our stuff, subscribe on iTunes or check out the Fool's family of shows at fool.com/podcasts. And if you're looking for more tech content from The Fool, follow us on Facebook at Motley Fool Tech. As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against stocks mentioned, so don't buy or sell anything based solely on what you hear. For Daniel Sparks, I'm Dylan Lewis. Thanks for listening, and Fool on.